All right. Good morning, everybody. Hopefully, y'all have a really good weekend planned. Looks pretty good in the market this morning. We do have some economic news on the agenda. The employment numbers in the overnight hours, there was, well, not really in the overnight. Yesterday, the ECB didn't do what they had signaled that they were going to do. And that kind of caused a little bit of a surprise. Things are still shaking out. We have job numbers today and the IBPMI. That rig count, it doesn't mean a whole lot of nothing. So, the consumer credit is so late in the day on a Friday like that. I You could have an expectation that there's could be a market reaction. It would be a safe bet to avoid the 3 o'clock hour until that report comes out. But I don't see that it would have a significant impact on our trading day. We always say that, but we never know, right? Even the craziest little surveys can sometimes be that catalyst. So for today, when we look at the big picture of where the market had been, and we are outside of that range now, we have made significant moves off of these lows, and a market just cannot maintain a single one direction. It has to pull back. It has to pull back for it to be healthy. Otherwise, it just starts to become something that looks parabolic, and then that is just a risk all on its own. We're starting to see that a little bit when you look at the implied volatility starting to pick up. I know that this doesn't seem like much, but when the market goes up, volatility is supposed to go down. And the fact that it actually started to go up with the market going up tells us that we're starting to get into the edges of what investors think is a little too big of a move, that it needs to pause and let everything get caught up. Uh, a lot of CMT analysts will talk about a damaged chart or a damaged market and it needs to heal. And a lot of times that's often what they're referring to is that a market had made too big of a move. And a lot of newer traders make the mistake of thinking that technical analysis is something that you should be able to apply all the time. But when you get something that looks like NVIDIA or Tesla, you take technical analysis and throw it in the trash. There's absolutely nothing to do with it until the parabolic move ends, right? Because the market is no longer moving with rationality and measured moves. It is just rip fire greed until the greed is done, right? So same thing like when things go bad, then it's rip fire fear, like when Boeing had airplanes fall out of the sky or something like that. For today's session, bring in the bubbles, just make it easy and get this week done. I had a really good week. I hope you guys had a good week. I was in at least half of those FANG names when this started to kick off, so it's been a really good week. It appears like we still have a missed floor pivot. When the dollar started moving in the overnight hours, that gave the ES and the NASDAQ a little bit of juice. It's nice to see that. So with the MDP, we're really expecting to give back this move now that the dollar has kind of settled down a little bit. I say that, but the dollar comes online at 8, the bonds come online at 8:30, and this could just fire right back up again. But I'm going to be expecting this to be another range day, much like yesterday. We're giving these moving averages time to get caught up. We are outside the top of the weekly expected move, and there is a history of getting outside the expected move and continuing the move. It's happened before, it'll happen again. It just doesn't happen as often as we would think, right? When we're outside like this, it is very common and very normal to come back inside the box. Now, on the last day of the week, maybe that won't happen. At the very least, I expect to tag it today, and I expect to tag that floor pivot too. But at the very least, I expect to come back down and retest that expected move top on the intraday. Looking at this cloud here, there was one more that I was going to turn on. I had built acceleration bands the way that Price Headley had designed them for weekly charts. And I don't want to have to go out to the weekly chart all the time. I want that band on the intraday chart. And this top line here is the top of the acceleration bands. So if we were to go out here and look at a weekly chart, there is the acceleration bands. Yes, we're at the top of the bands. It's not the top of the bands that's important. It's if we break out of the bands or not. Right? That's when it becomes important. When he built these, he actually had a trade system that went with it, and he wanted 2 candle closes on a weekly chart. So it breaks out of the bands here, the second week closes, and that is your trigger, and there is your trade. Yeah, I mean, I'm not gonna dig into that, but I do want to know if we leave the bands, right? So we are there. We are bumping our head on the top of the bands, and we just got to recognize that this is real. That's where it is. You can go back and see the history of how price reacts to acceleration bands at that level. If we get through that, we got a 0.5% to the upside, and then a 1%. Very likely we could hit that 1.5, but we've already had more than 12 hours in the trading day, and we haven't done much, right? And that's got to be taken into consideration. We've got an ADR now of 0.87. Earlier in the week, it was like 1.2 or 1.3. Every single day this week, we've been reducing that ADR because it's dropping off, right? It's just getting smaller and smaller. The way the market works, the more this goes on, like an endless cycle. It just gets smaller and smaller and smaller, and then we will get these very big explosive moves, and then it'll go back around, and it'll be smaller and smaller and smaller, and then very big moves again. So we are cycling through. It is possible that we hit that 1% today, but you would see it coming. It's going to be in tick. It's going to be in trend. The AD, you'll see it in the sectors. It will be all over the place. It should not be a surprise. Now, we were bifurcated yesterday with the ES sideways and the NASDAQ running. This morning, they were working together. But this morning, it was more about the dollar moving than anything else. So you can see this significant move in the dollar. And notice how my mouse lines up. The dollar started turning green and running first, and then the markets started to react to that, including the bonds, oddly enough. Now, at first I thought it was the bonds because that would make more sense. Honestly, it would really it would make a lot more sense if it was the bonds, but it was the dollar. So keep your eye on the dollar today. Keep your eye on the bonds. That's what is the catalyst for this market. We've had some really great earnings, and that is also being a catalyst pushing the market higher. It makes sense that yesterday we had this really amazing move in the NASDAQ because that one was the bonds. So the bonds made that significant move. and the NASDAQ loved it. And when that move ended, so did the move in the NASDAQ. This is why we watch these things. So the expectation at this point is that if the dollar and the bonds settle down, so will our market, and we will have a nice, quiet, range-bound day as long as like the job numbers do not get out of line, right? We don't need the economic news of the day to kind of topple us over at this point. That'd be kind of a bad idea. So we got to keep our eye on the job numbers, keep our eye on the unemployment and the other economics that are coming out. Don't want to get caught sideways with those. We know when they're coming out, it's not going to be a surprise. The ES to the downside, if we do happen to break that floor pivot and continue moving downward, then we will deal with yesterday's lowest point. The lowest point and the open are wide enough apart that you could actually provide those as two different pivots. You could also deal with the Globex high as another pivot. That's yesterday's Globex high. We still have yesterday's highest point to contend with if we wanted to have that one marked out on the chart as well. But considering it's so close to the expected move, I would just use the expected move line. That way you're not compounding too many lines on there, right? And it just starts to be a bunch of junk. Notice where the market stopped yesterday. That line has been on my chart all week. It's a bit random that price moved right to the line that has been on my chart all week. So a move to the downside, if this does continue, will be our own Globex high, the expected move, floor pivot, yesterday's Globex high, the open, the low, and 0.5%. The blue cloud that you see down here is the 5 and the 10 period daily moving average. I would really like to bounce that 5 for another springboard run. So, this is one more reason why we need the market to take a breather here. When it gets too far away from the 5, it tends to pause and wait for that 5 to get caught up. It's what we did yesterday. It's what we did in the overnight hours until the dollar started to move. It's healthy. This is good. It allows the market to heal a little bit after this crazy move. In the NASDAQ, same thing. This reacted to the bonds really well. You can see that we are already outside of the acceleration bands. Remember what I was just talking about? These are weekly acceleration bands. We have an average daily range of 1.2%. We're only up 0.25% now, but we were up over 0.5% earlier this morning. So we gave most of that back. Not a surprise. This is linear regression at its finest. It's exactly what we would expect to happen. So we mean reverted, came back down to the other side of the channel. We breached back inside of yesterday's highest point. We have not yet touched that floor pivot, so it's a missed daily pivot at this point. We'll be looking to break the low of the Globex, touch the floor pivot, break the half, come down to yesterday's high, Globex high, I should say, which would put us at the top of the acceleration bands, and then the open, and then the low of yesterday's intraday trading. That would be very close to the weekly expected move top. That's how far outside of the top of the bands we are. It's also how far away from the 10 period and 5 period we are. Notice top of that 5 period moving average. It's a long way away. It needs to pause here and let the market get caught up. It doesn't want to outrun too fast. It becomes unhealthy. If we were to make moves that far to the downside today, I think it would be very significant. It would really start to light people up. I don't see it getting that bad without negative news. But on the other side, I don't see it getting this good without some news either, right? After yesterday's move, it would not surprise me at all if we just finally take a breather for the rest of the day. but there's a lot of names that could really jack that up. Keep your eye on the bonds. Keep your eye on the dollar. Confirm with the VIX. So we got the S&P 500. We want to change it to pre-market. And we're going to filter it down to 100 names. Give it a little bit of a color scheme. We've got a mixed bag of goods this morning. Not really extreme, which is kind of nice. This kind of portends for the day, right? Look at those financials. They're really lit up. And the ones that aren't, I mean, you got Schwab. Most of these look good, right? PNC, PLD, BlackRock, they're kind of flat. Couple of red ones, but not very many. And Schwab's a trading firm, right? It's like if we were to put TD Ameritrade on here and Fidelity, those are going to be labeled as financials, but they're not the same as these other ones that are going to be reacting from the bonds and the dollar. We've had a pretty interesting week in retail. It's been almost a rip your face off kind of rally. There's a massive capital rotation going on. So when we're looking at the S&P, I always focus more on those financial names because the NASDAQ 100 does not have financial names in it. So when we're trying to get a view of what's going on across the market and where there could be bifurcation, it really stands out to keep your eye on those financials. And you can see the names that are leading this list. There's a lot of financials in here. Financials have been tied very nicely with energy through most of the year. Transportation is standing out really well too. Makes sense with all the whole shipping thing going on out there. So we want to change this to the NASDAQ 100. Hey, they changed the label back. Yes, I did not like that US 100 name. I'm glad they changed it back. That was driving me crazy. It's the little things, All right, so NASDAQ 100, pre-market change percent, no filter needed, but I like clicking this button here because it mono sizes all of these things, right? You got that one, and then this one. And I like this better. I don't know. It doesn't change anything, right? It's just a visual. But I think it kind of breaks things down a little nicer. Then I change the color scheme so it kind of pops a little bit. That technology services, man. Talk about, keep your eye on the distinction between those China names and the non-China names. That's the first distinction you really want to make when you're digging into like technology. First thing on the list, right? Break those China names aside. On the retail, it's all about the digital. Walmart had really spent a lot of money to go retail digital. If anybody remembers, they were all fighting over that one social media app. Of course, Walmart didn't get it, but they have a contract with Microsoft, and they're building a social media app that integrates with their retail sales. And Walmart's retail sales are online are very, very small. So much room for growth there. Supply chain issues. They were actually talking on Bloomberg and brought up names like eBay and those alternative sources of products, because even companies right now are shopping on places like eBay to get their hands on things because they have such a supply chain disruption. Looking at the extended hours, um, that Moderna move, we may feel some ramifications on that today. I'm not sure how that's going to play out. But on the other side, looking at the positive names, keep your eye on the chip names. The chip and retail. We're going to be jumping over to look at TrendSpider here in a moment. We'll check pot stocks and EV, things like that. But this is our opportunity to kind of dig into the more broader market before we really dial things in. So when we look at all U.S. companies, pre-market change, it's monster, right? It's really big. It's too big. So we go in here and we knock that down from 8,500 names to, around 100 names. I missed it a little bit, didn't I? I had it perfect. 102. It's good enough. We want to knock that down to about 100 names. And since this isn't dividing, the NASDAQ versus the S&P, this is just kind of lumping everything together and saying, give me the top 100 names by market cap, and then sort them by their pre-market change. It's a very divided marketplace. Look at health technology. Oh, yeah. Yeah, we're going to feel that. Amazon, Baba, and JD. They're very similar in what they do. All three getting whacked to the downside. JD feeling the brunt of it the most. So when we come in here and we ask the question, well, how many names, in the S&P are up at least 0.5%? 18 names. How many are down at least 0.5%? 6. All right. So, 3-1, more positive than negative. We're going to really want to see things turn around, though. It's a very sideways morning. And once the economic news comes out, that's really going to be the morning. You know what I mean? Like, that's going to be the thing. So this may be a day where you definitely want to keep your eye on the sectors, just like we've been doing this week. Yesterday, I mean, it stood out very well what kind of day we were having just by looking at the sectors. It kind of pointed you in the right direction. Look at the EV markets this morning. iDrive up over 5.25, almost 5.5%. Ford and GM, Neo and Ride, Li Auto, right? And then, where's Tesla? All back at the bus. Crypto as well, lit up kind of nice. Remember that this crypto is more about blockchain names than crypto. It's crypto, right? Um, I haven't found one that I like yet to put in like a crypto ETF. There are some outside of the U.S. and now just recently we have some in the U.S. But I want to let them unfold a little bit before I start using them in this. Look at the chip names. They are all lit up except for one name, and it's not negative. It's just flat. So the chip sector is hot this morning. Pot stocks are hot this morning. Crypto's moving around reasonably well. The EVs, man, a little bifurcated maybe, but all those ones that didn't get attention are now getting a little bit of attention. And the one that was dominating is starting to slide back a little bit. I still wouldn't bet against Tesla. But if you do want to participate in it, look at the expected move, go like 20 days out and buy a debit spread on the edge of the expected move. You know what I mean? Like you're going to risk maybe $100. And in Tesla, trading with $100 of risk, that's cheap. All right. I don't want to lose $100, but I would rather risk 100 than, $4,000. Trading Tesla is expensive, but that's a way to play it, right? And you could play it on both sides of the fence too, really, if you wanted to. Take iDrive here. It'd be kind of like the same thing if this was liquid enough that you would go out of the money and you would target the fall, right? You could just go like an out of the money put debit spread. And if it doesn't fall, then maybe you don't, you're not going to win, but you only lose like $8. Pay more commissions than anything else. You could trade these crazy parabolic moves without putting a lot of money on the line and still having a really, really good return if you happen to get it right. So these are the sectors that I would keep my eye on. We can kind of see what's moving around a little bit here, but the way Thinkorswim works, there really isn't a good pre-market change. Jets, energy, cloud, industrials, another version of like big tech, finance, communications, and then the other tech, consumer, building materials, consumer, metals, biopharma. And remember what I talk about with EEM. This is my risk on monitor, right? If I was to build an indicator that monitored risk on in the marketplace, it would be the EEM. Maybe something like a lower study, an oscillator that looks very similar to like an RSI, only it would have the EEM built into it instead of some other metric. So energy and finance. If that move in the bonds continues and in the dollar, it's going to be finance. That's what I got for you guys. Have a good day. Be safe. Be careful. Enjoy your weekend. I will be streaming in the futures room this morning. And I don't have anything on the agenda this afternoon, so I'm really hoping for an opportunity to come in and put together some swing trades. I'm going to, of course, be using that new channel that I built. For those of you that are in my coaching Discord, this bot is something that I used to have in the old Discord. It actually goes with the book from Hit and Run Trading, and it goes to the website for swingtradebot.com. I was reminded yesterday when I was talking to somebody that I needed to get this back up and running again. Swingtradebot.com is a very interesting website where somebody took the book Hit and Run Trading, took all the strategies out of it, and then wrote them into scanners. And then, of course, they sell this as a product. You could buy it, use it. It has intraday and daily scans. It does all kinds of really great things. I had it for a year. I kind of outgrew it. I don't pay for it anymore. I don't have a subscription here anymore. But you can go in for free and check some of these things out. They make a lot more sense if you read the book, right? The book Hit and Run Trading. So if you're in my coaching Discord, these names, like what the heck is the Jack in the Box bearish scan? Well, if you've read the book, you would know what that is, right? And where's the book? I shared it in the Bullish Bears Discord. So when you come back over to the Bullish Bears Discord and you go down to, say, the resources zone, open up trading books, Hit and Run Trading is in here, right? I've shared a couple of books, The Art and Science of Technical Analysis, a couple of books from Woody's CCI, and there it is, Hit and Run Trading. I believe it's part 2, maybe it's part 1, but this book ties into that website, and this scanner is grabbing those scan names with the setups. And it is very specific about how these things trade. There's no ambiguity, there's no doubt or confusion. What I mean by that, get out of here. Get. Broke it. Is if we were to come in here and look at some of these names and we say, well, I don't know what a 180 bullish setup is. What is that? How do we trade it? What are the criteria for it? When we come in here and we read this, oh, this is the criteria from yesterday that we need to see. This is the criteria that we need for today's chart. And then, tomorrow, this is where we would buy, and this is where we would put our stop. Literally everything that you would want, a fully formed strategy with all the details, how to find it, what you need to see to pull the trigger, and where you would put your stop. Now, that's one very simple strategy. And there are a lot of those strategies. There's a whole, look at me scan down this list. Look at all these things. Bearish ones, bullish ones, right? And yeah, there's day trade stuff. There's swing trade stuff. There's longs and shorts and just all kinds of things. I'm not promoting this website, by the way. You know what I mean? Like, you don't need to buy this. I'm not logged in. Read the book. Check these scans out. They can help you find trade ideas. And remember, we're bullish. Don't let those bobbing heads on TV convince you that, the world is burning and that it's all bad and that you should be going short. Yes, take shorts. Yes, make money to the downside when you can. But we are in a confirmed uptrend. Act accordingly. That's it, everybody. I'll see you next week.